Hello, everyone, and welcome to the Weekly Watch. I'm your host, John Briggs. Markets and investors lately have been fixated on the potential for peak policy rates, peak inflation, and thus a change in all the major trends we have seen this year. Those trends being higher yields, higher dollar, and lower stocks. Have we reached that point? Are we at the turning point here? Well, today's CPI report in the U.S. showed more slowing than expected. So I'm happy this week to be joined by NatWest Chief U.S. Economist, Kevin Cummins. Kevin, we're hot off the presses, only an hour or so after the report hit, but we're seeing a substantial move lower in yields, significant move lower in the dollar, and significant rally in the equity market. This is off optimism that we've reached, or as I say, or perhaps I should better say priced in the worst of the cycle in regards to high inflation and the worst in regards to significant Fed rate hikes. We've been here a couple times before, actually, with this optimism, and it's never really turned out to be the case. But sticking just with inflation first, have we seen peak inflation in the U.S.?
I do think on a year-over-year basis that you're looking at inflation, we probably have seen the peak. But I would follow that up with, I think the narrative hasn't changed all that much, that it's going to remain very elevated and very inconsistent with the Fed's goal of getting inflation back down to 2%.
Okay, then given that, how will the Fed respond to this data in the near term, which includes up to and including the December FOMC meeting?
Yeah, I think the Fed will be a bit encouraged after the really disappointing report that we had in September. So I think it would go in the column of saying the Fed can step down the pace of rate hikes of, moving from 75 basis points over the last four meetings to dropping it down to a 50 basis point hike at the December meeting. Ultimately, though, I don't think it really changes the backdrop too much. It is just one report. And the Fed has signaled that they have a ways to go, so into more restrictive policy. And of course, the Fed will have the November CPI report the day before the December FOMC meeting, which is on December 14th. In addition to having another jobs report for November heading into that meeting as well. So by itself, today's data were a step in the right direction, but it's probably too early to tell, and I wouldn't make too much out of just 1 month's worth of data.
All right, so what about the long-term path for inflation? I mean, some of the things that I've discussed a little bit is trying to differentiate between peak rates and pivot rates. And I'll get into that a little, or pivoting dovishly, where as opposed to peaking is stop being so hawkish. But has this changed our view medium term for inflation, say through the early part of next year, or our view that the Fed would peak at 5%?
No, it hasn't really changed the backdrop all that much. I mean, the monthly changes can be pretty noisy from month to month. Part of the reason why we saw a softer than expected report was on some of the core goods prices, showing more weakness than we thought. I wouldn't necessarily extrapolate that going forward. You look at things like apparel prices and airfares and some other items within the core, they do bounce around on a month-to-month basis. I do think what's more important is the persistence that we've seen in core services prices. That's really been quite dramatic. If you look at core services, admittedly for October, it was only up 0.5, but on a year-over-year basis, it was up 6.7%. And that's the reason why inflation at the core is still running above 6%. We don't have that coming back below 6% by the end of this year. And we think that's going to be really sticky in 2023. We do expect that to moderate over the course of the year, but those prices are really reflective of tightness in the labor market, which with the unemployment rate still hovering only at 3.7%, and that's well through the natural rate of unemployment. I don't think we're going to see a real shift in that component, which makes up about 3/4 of the core. So, the Fed is going to probably be looking at midway through next year of core inflation somewhere north of 4%. Yeah, it's a step down from where you were at the end of this year of say 6%, and it's a move in the right direction. but I don't think they're going to feel confident enough that inflation is going to get down to 2% if inflation still has a 4 handle on it, for example. So
Yeah.
I think they're going to continue to move rates higher, closer to what we have the terminal rate of 5%. We think that the Fed could start to, kind of make that shift as early as the December meeting when we get another updated dot plot.
Yeah. And I think that's kind of reinforcing that point that I try to consider. And I understand that, markets are running here a little bit and we've had longstanding trends. So a snapback from those trends can probably extend in the near term, but just be careful. In my view, I think everybody should be careful a little bit about getting too eager too quickly, for a medium term or larger moves, just because you do have still high challenging inflation. And yes, the Fed may peak, but it's going to be a long time until inflation comes down significantly enough for us to start thinking about reduction in accommodation. So again, we've had a lot of very extended moves. So I wouldn't be surprised with a relatively clear data calendar, at least until we get towards the end of the month, that we see some of these moves extend. But just kind of along with you when you're talking about how core service prices are going to be slow to come down, just injecting a little bit of caution, I think, from my market perspective, about the extent to which we should run some of these snapbacks. So that's it for this week. Thank you, Kevin, for joining us. I appreciate those insights. And thank you, everyone, for joining us for this episode of the Weekly Watch. As always, please remember to hit subscribe so you can watch our latest episodes as soon as they're available. And hit the like button, please, so it's easier for others to find. Thank you and have a great week.